G'day, Rudy here. So welcome to Australia's most comprehensive weekly dividend high div ETF, not ETF, shares, yes, and some ETFs update. So we'll kick it off first of all looking at bond yields. So Australian 1-year bond yields still hanging around 3.4%. So I think the RBA is at 3.6%. So it's just stuck there. The 10-year yields paying 4.3, still in that long-term bullish, i.e. upwards movement scenario. Okay, the Aussie 10-year over the 1 year. So you can see there's a bias of basically longer term rates increasing over the short term rates. Seems to be a global phenomenon. Central banks dropping rates and long term rates going up. It's happening in every country. Interesting. Did I hear you say that's inflation coming down the pipeline, Rudy? Okay. Alright, so let's kick it off. Yes, and so someone asked, so all the dividends that I say here, I get from Morningstar, because I know there's a bunch of places you can get rates from. Some look at forward rates, some look at back rates, some make it up. So that just saying that you know that that's where I'm getting these from. Okay, and if you should always do your own research, and you want to check they consistent dividend payers, blah blah blah. You know the drill. Okay, so Atlas Arteria, so global infrastructure, toll roads, looks wonderful. And the good thing now is reporting season's out the way, so all the skeletons have come out, so we can now look at charts properly too. So that looks good, 7.5, good. Probably doesn't come with franking credits though. ANZ. So paying 4.9. Okay, so ANZ. Oh, well, I think if it comes, well, I don't like banks. ANZ I do like. That looks fine. I mean, really, it's bullish. It's bullish. So no issues. APA. So pipeline business 6.4%. So that looks good to go here. Once it gets above, it's not one of those weight things. I think it will happen. It'll get above there. Got a nice base there, so that looks good. Horizon, so they're 5.1 rail freight operator. So they're a bit. Well, I reckon if it got down to 315, you'd have to buy it. But that's forming a nice base, so it doesn't look scary. BFG, this is a new one I fell over. It's not the great, so 5.5 div. They're sort of in that fund management space. I read they're merging with trying to get in bed with premium platform thing. Anyway, the chart doesn't look too bad. So put that on your radar. Beach. So I'm quite bullish on oil and gas. Everyone's bearish on oil and gas. So it's a good time to be buying. Nice div at 7.4. I reckon if you could pick it up down here, it'd be nice for the long-term hold. Yeah, just buy it and take the 7.4. It's a good time to be buying oil and gas stocks, I reckon, in my opinion, not personal advice. Digger data, so 5.2. I think it's based on their current. It's about 5.6 anyway. I don't know why, for some reason I like this one. The director just bought some too, and they came out with a decent profit result. So Yeah, that looks fine. I mean, tech is still, everyone's got to upgrade their software, all these businesses, and they've got to get it from those guys. So anyway, all right. DBI, this was put to me by Jimmy Carter. So div of 5.3. So they got the coal terminal. So that looks like it's coming down. So what you want to see is it come down to, what's that, 430, and then having a bit of a consolidation, bit of sideways, and then a bit of green, and that would be a buy. So don't rush into that one just yet. Deterra royalties. So div 5.2. So they're taking a clip off, is it BHP? Yeah, BHP's iron ore. So iron ore prices are on the rise now, and they're trying to spread into some other new lithium type anyway. That looks good. Nice solid bottom. So I can't see it falling out of bed. That'd be good to accumulate around here. Elders, so 4.9. So it's just snuck in. I'm keeping. So I did say last week it needs to just get above here and then some consolidation, and so it hasn't trajected that. So I'd wait for it to come back and find some bottom. So, but we'll keep it on the radar. Fortescue 7.3. That's a buy. I mean, that's lovely. GQG, so they're the fund manager, global fund manager, 10%. I'm not. I don't know about. I mean, technically that's support, so it'd be a good buy. I don't know. I just don't. I don't know. They're just in contest with indexed funds. But look, if you started seeing a bit of green, then yeah. But it's not an ideal, like, slowly dividend stock. This is another. So Helia Group. I think this was given to me by a subscriber. They're paying 5.2. I don't know. It's a bit too volatile for me for a dividend stock. Is it a great business? Well, I think that basically, if you sign up with a home loan with Commonwealth Bank, you've got to take out their insurance, so that's pretty good. But I don't know, it's just a bit too erratic. No, that's just my opinion. So IGO, the lithium miner, and a bit of nickel and a bit of refining, 5.1. So I reckon that's good to go. ING, the chicken farmer. I did say to sell back here. Now it's paying a good div at 7, and people aren't going to stop eating chicken, so I reckon this will be a perler if it comes down here and forms a bottom, like one of these things. You could pick up a nice div and some capital growth, I reckon. Not now. IPH, so that's the IP services, Asia Pacific, 8% div. That looked like it's forming a bottom. I'd wait a bit, or if you really like that space, then buy it. Karoon, so 5.3, another oil and gas play. Yeah, I reckon, just as I said, I'm bullish in this space, oil and gas, so I'd buy that. Okay, this one was given by Lindsay Australia. So Lindsay, as I said, just needs to at the time needs to get up above here to prove it's worth fighting, but it hasn't. So it got bought up down here. You can see it went down here, then got bought up. So there's some buying at these levels. So just wait, no rush. Wait for it to form a bottom. MMS, Macmillan Shakespeare. 8.3 div, salary packaging, novated leasing, government client. What else do you want? New Hope Corporation, my preferred coal play, paying a 9% div, maybe a bit more. Yeah, happy to do that. People hate coal, I love it. 3 billion people in China and India want it. So, all right, this one's Northern Star, so it's only 4.7, but it's in there because I like gold, and they've been consistently growing their dividends. So if you want some gold exposure, then that's your boy. Rural Funds Group, so 6% div, agricultural space. That looks good. Rio, I think 5.1%. Iron ore, solid. That's all you can really say. Okay, Spark. I had an email on an ex-shareholder. He doesn't like them. They've sold part of the. I'm just going to keep it on here. But he reckons they're not doing any good with the business, and it shows on the share price chart. But so stay away, but we'll just keep an eye on it. Okay, the king. 6.3. And if you're a dividend investor and you don't hold Woodside, I was going to say there's rocks in your head, but that wouldn't be nice. But you got to have him with oil. Like I said, oil and gas. I'm bullish. All right, so they're the ASX stocks. Then there's a few ETFs which pay a good div. So we got the King MVR. So this King actually has Woodside's a top holding. I rave on about it in this show. It's the new benchmark for growth and income. Just above 4%. And there's VHY. It's paying about 4.5%. I do a benchmarking if you haven't seen it before. So this is MVR over VHY. So it's line ball which one you invest in. And there's another one, SYI, paying 4.5%. And we do the benchmark MVR over SYI, still line ball at this stage. Alright, if you got any other ASX 300, ASX 300, or if you got some smaller ones paying a good div, share it with the group so we can all benefit. Otherwise, that's a wrap until next week. See ya.